All right, welcome to the deep dive. We've got something really interesting to dive into today.
Yeah, this one's pretty cool.
It's the Vedartha Equity Opportunities Fund.
Okay.
And, a lot of buzz, obviously, around India right now.
Right.
And this is a brand new fund, so we've got their in-depth strategy document. They were kind enough to share that with us.
Mm-hmm.
And it's packed with information about, their team, their specific growth opportunities they're targeting.
Exciting stuff.
Yeah, so we're going to break it all down for you today. By the end of this deep dive, you'll have a really clear idea of, if this fund aligns with your investment goals.
Sounds good.
So where should we start? I mean, the name itself, Vedartha, it's pretty unique, right?
Yeah, it's not just a random name.
Right.
It actually has a deeper meaning.
Oh, interesting.
Yeah, it's a combination of two Sanskrit words, Veda, meaning wisdom through knowledge, and then Artha, meaning prosperity through wealth creation.
Oh, I like that.
Yeah, it kind of sets the stage for their philosophy, what they're trying to do with this fund.
Right. They're connecting those two ideas, knowledge and wealth creation.
Yeah.
So who is the team behind this? This is a brand new fund, but it seems like they've got quite a bit of experience.
Yeah, the team boasts over 75 years of collective experience in the Indian market.
Wow.
Which is pretty incredible. And Mehul Singh, he's the head of alternates there.
Okay.
He brings over 20 years of experience managing billions of dollars in assets.
Oh, wow. So this isn't his first rodeo?
No, not at all.
Yeah.
And his past performance has been pretty impressive.
That's encouraging to hear. So a lot of experience at the helm. But what about the direction, right? Where are they taking this ship? They talk about something called the R.I.S.E strategy. What's that all about?
Yeah, the R.I.S.E strategy stands for Resilient Industries, Sustainable Growth, Emerging Opportunities, and Innovation First.
Okay, so a mouthful, but it sounds like they're looking for sectors that can kind of weather the storm, right?
That's right. They're targeting those sectors that are poised for both short-term and long-term growth.
Makes sense.
It's a balanced approach. Looking at companies that can kind of ride the current wave of economic expansion,
Yep.
but also adapt to the future.
Yeah, and they're clearly very bullish on India's growth.
Oh, yeah. The document paints a very optimistic picture.
They project that India is going to become like the third largest economy globally.
That's right.
And their GDP per capita is also rising. Historically speaking, when a country kind of hits that stage of development, it creates a ton of investment opportunities.
It does. It's a really exciting time to be looking at India.
Yeah. So are they are they laser focused on specific sectors, or is it more broad?
Well, they are using what's called a flexi-cap approach,
Okay.
which gives them the ability to invest across different sectors.
Got it.
So it's not just limited to one or two areas.
Right.
They can be nimble, move their money around based on, where they see the most promising opportunities.
Makes sense. So where are they seeing those opportunities right now? What are some of the sectors that they're really excited about?
Well, one that really jumped out at me was housing.
Okay. Yeah, that's a big one.
Huge. They're projecting the affordable housing market to reach a staggering INR 67 trillion by 2030.
Wow, that's a massive number.
It is.
That's a lot of houses.
It is. Think about all the, materials, the labor, everything that goes into building that many houses.
It's a whole ecosystem, right?
It is. It's not just about the construction companies themselves.
Right.
You've got, cement, construction equipment, paint, furnishings, the whole 9 yards.
Yeah. Yeah, all those ancillary industries are going to benefit.
Absolutely. So there's a huge ripple effect there.
So, big potential for investors, but of course, with any rapidly growing market, there are risks, right? I mean, are they acknowledging that in the document?
Oh, absolutely.
Okay.
They're not shying away from the potential challenges. They emphasize the need for careful company selection. Making sure you're investing in companies that can actually navigate those potential hurdles.
What kind of hurdles are we talking about?
Well, things like regulatory hurdles, right?
Yeah.
Infrastructure bottlenecks,
Makes sense.
competition,
Yeah.
from existing players.
Right.
So they're not just looking for companies with growth potential. They're also looking for those
Yeah.
that can execute and
Yeah.
adapt and overcome those challenges.
That makes sense. So what else are they looking at? What other sectors are catching their eye?
Well, healthcare is another big one.
Okay. Yeah.
India is already a global leader in vaccine manufacturing.
Right. Well,
And there's huge potential there in medical tourism as well.
Oh, interesting.
And the document points out that India needs an additional 2.4 million hospital beds.
Wow, that's a lot of beds.
It is. It's a massive market waiting to be filled. So they're looking at opportunities in pharmaceuticals, medical equipment, healthcare technology, all those areas that are going to benefit from this growing demand for healthcare services.
Right, right. That's a great example of, their R.I.S.E strategy in action. You've got this immediate need, but then also this long-term growth potential.
Exactly. And what's interesting is they don't just talk about broad sectors.
Right.
They actually dive into very specific examples of why certain areas within these sectors are poised for growth.
Oh, interesting.
So they're not just betting on India's growth in general. They're being very strategic about where they're placing their bets within that growth.
Okay, let's move on to another one that caught my eye, automotive. India is already the fifth largest car market in the world,
Yeah, pretty impressive.
largest tractor producer globally. Where do they see this sector going?
Well, the document highlights a couple of key trends that are kind of reshaping the automotive landscape.
Yeah, okay.
First, you've got the government's push toward electric vehicles,
Yeah, that's a big one.
which is opening up opportunities in battery technology, charging infrastructure, all that.
Right, right.
And then you've got the rise of shared mobility, ride-hailing services, subscription models, all of that.
Yeah, yeah.
So they're seeing a lot of potential in those areas as well.
It's interesting, right? Because it's not just about building more cars.
Right.
It's about how people are using those cars, how they're accessing transportation.
There's a whole shift in the way we think about transportation.
Right. But of course, this is a sector where global trends and local conditions have to kind of align, right?
They do.
I mean, India's path to EV adoption might look very different from, say, Europe or the US.
Absolutely, there are unique challenges there.
Yeah, like charging infrastructure, affordability, things like that.
Exactly.
So they're going to have to carefully assess how these companies are tackling those challenges
They are.
and which ones are really best positioned for long-term success.
That's right. They're doing their due diligence.
Okay, before we move on to the other sectors, there was one stat in the document that just blew my mind. 78% of screen time in India is entertainment.
That's crazy, right?
That is wild. I mean,
Yeah.
that's a massive shift towards digital media consumption.
It is, and it really highlights the potential of India's entertainment industry.
Yeah, I mean, this isn't just Bollywood anymore.
No, not at all.
We're talking streaming services, online gaming, the whole digital ecosystem.
It's a whole new world.
Yeah, and it creates opportunities not just for the content creators, but also for all the companies that are providing the infrastructure and the technology.
Absolutely, it's a whole new playing field.
Okay, lots to unpack there, but let's keep moving. The last sector they highlight is travel and tourism.
Okay.
Another one with massive potential.
Huge. They project that India's tourism sector will reach $488 billion by 2029.
That's huge.
It is. You've got a rise in middle class, increasing disposable income. Indians are traveling more, both domestically and internationally.
Yeah, makes sense.
Plus, the government is investing heavily in tourism infrastructure.
Yeah. I mean, India has so much to offer, right?
Oh, absolutely.
The history, the culture, the natural beauty, it's incredible.
It's a beautiful country.
But with all that growth comes the challenge of managing the impact of tourism, right?
Right.
On the environment, on local communities, that's something potential investors need to consider.
Absolutely. Sustainability is a key factor here.
Yeah. So we've covered 5 key sectors they've identified: housing, healthcare, automotive, entertainment, and travel and tourism.
And what's important to remember is, they're not limiting themselves to just these sectors.
Right.
Their FlexiCap approach gives them the flexibility to move into other promising areas as they emerge.
Yeah, because India is a dynamic economy.
It is. It's constantly evolving.
New opportunities popping up all the time. So how do they actually decide which companies to invest in?
That's where their 5-stage screening process comes in.
Okay, we touched on that briefly, but let's dig into that a little bit more.
Yeah, let's break it down.
Because they start with, thousands of companies, right? Over 5,500 listed stocks.
It's a massive universe to choose from.
Yeah, so how do they narrow it down?
Well, it's a pretty rigorous approach.
Okay.
They start with, over 5,500 listed stocks.
Right.
And they gradually narrow it down to a concentrated portfolio of 20 to 30 high conviction investments.
Wow, so a very selective process.
Very selective.
Okay, I think we need to take a closer look at that process.
Yeah, let's unpack it.
In the next part of our deep dive. All right, so we left off talking about how Vedartha actually narrows down their investment choices from thousands of companies to a handful.
Right. It's a pretty intense process, this 5-stage screening they've got.
Yeah, so walk us through it. Where do they even begin?
Well, they start with a massive pool over 5,500 listed stocks in India.
Okay, that's a lot of companies to sift through.
Oh, yeah. So the first stage is really just about applying some basic filters,
Got it.
like, looking at market capitalization,
That.
just to quickly weed out those companies that don't meet their initial criteria.
Okay, so kind of like a first round of cuts, just getting rid of the ones that are definitely not a fit.
Exactly. Narrowing the field a bit.
So once they've, kind of trimmed down the list, what happens next?
Stage two is where it gets really interesting.
Okay.
This is where they start to evaluate the management team.
Oh, so they're not just looking at the numbers.
Yeah.
They're looking at the people behind the company.
Exactly.
Okay.
They're looking at their experience, their track record, their commitment to good corporate governance.
It's like, are these people trustworthy? Can they actually lead this company?
Right. It's about identifying companies with strong ethical leadership.
Yeah, which is especially important in an emerging market like India, right? I mean, there's more potential for, I don't know, maybe things being a little bit less transparent.
Yeah, absolutely. You really want to make sure you trust the people at the helm.
Right. It's like you're getting on a ship. You want to make sure the captain knows what they're doing.
Exactly. So they're not just looking for a company with a good product or service. They're looking for a company with a good captain
A captain that can steer the ship in the right direction.
through rough waters
Yeah.
if necessary.
Okay, so they've narrowed down the pool. They've checked out the management. What's the next hurdle?
Stage three is all about the business itself.
Okay.
They really dig deep into the company's business model.
All right.
How does it generate revenue? What's its potential for sustainable growth?
Got it.
They also look at the competitive landscape.
Right.
Who are their competitors? How strong are they? Where does this company fit in?
So they're really trying to understand the company's position in the market, right?
Yeah, they're looking for companies with a solid foundation,
Okay.
not just those that are, experiencing a temporary surge in popularity.
Right. Not just riding a wave, but actually built to last.
Exactly. They're looking under the hood to make sure the engine is in good shape.
I like that analogy because, it's easy to get distracted by a shiny paint job,
Oh, yeah, a lot of companies can look great on the surface.
but you got to make sure there's substance behind it.
Exactly. Vedartha wants to invest in companies that have a clear path to profitability.
Okay, and of course, you can't talk about investing without talking about valuation.
Right.
How does Vedartha factor that into their process?
That's stage four.
Okay.
This is where they use all sorts of metrics to determine whether a company's current market price is actually a fair reflection of its value.
Got it. So they're not just buying what's hot right now, they're looking for those hidden gems.
Exactly. The companies that are maybe undervalued by the market.
The ones that, other investors might be overlooking.
Right. They're trying to buy low and sell high
That's the goal.
to generate those good returns for their investors.
Makes sense. All right. So they've scrutinized the management, they've looked at the business model, they've considered the valuation. What's the final step?
Stage five is about putting it all together.
Okay.
They take all the information they've gathered through their analysis,
Right.
and they select those 20 to 30 companies that represent the most promising opportunities.
All right. So it's quite a journey from that initial pool of over 5,500 companies. It's like finding a needle in a haystack.
Yeah, but it's not just about finding the winners. It's also about identifying the companies they want to avoid.
Oh, that's interesting. So what are some of those red flags they're looking out for?
Well, first and foremost, they avoid companies with poor management.
Okay, that makes sense.
I mean, even if a company is in a great sector, if the leadership is weak or unethical, it's a huge risk.
Yeah, it's like that saying, a fish rots from the head down.
Exactly. No matter how good the opportunity is, bad leadership can ruin everything.
Right, it's like a recipe for disaster.
They also steer clear of companies with weak or unsustainable business models.
Okay, so they're not interested in those flash-in-the-pan companies.
No, they want companies that can generate consistent profits.
Right, they want companies that are built to last.
And the final red flag is a lack of clear strategy, or a strategy that's misaligned with market trends.
Oh, that's interesting. So they're not just looking at the company in isolation. They're looking at how it fits into the bigger picture,
Exactly.
how it aligns with what's happening in the market.
They're trying to understand the bigger picture.
Right, because India's economy is constantly evolving.
It is. And companies need to be able to adapt.
Okay, so it sounds like they're really taking a holistic approach.
They are. They're not just chasing the latest trend. They're trying to find companies that are solving real problems.
Companies that are creating real value.
Exactly.
So they've got this deep understanding of India's economic landscape.
They do.
And their investment framework is designed to really capitalize on those opportunities.
They're looking for companies that are well-positioned for growth.
Okay, so we've talked a lot about the big picture, but I think it would be helpful to, zoom in on a specific example.
Okay.
So let's say housing, right? We talked about how they're projecting this massive growth in the affordable housing market.
Right. INR 67 trillion by 2030.
Yeah, so how would they actually approach that sector? Would they just like invest in any housing company?
No, not at all. They would dig deeper.
Okay.
They might consider a company that manufactures cement, for example.
Oh, okay, so a key ingredient in construction.
Exactly.
Got it.
Or they might look at a company that provides financing for home buyers.
Right, because that's a crucial element in making those homes affordable.
Absolutely. So they're not just betting on the sector, they're identifying the specific players within that sector that are most likely to benefit.
So it's like they're putting together a puzzle
Yeah, they're carefully selecting each piece.
to create this like complete picture of India's growth story
It's about understanding the nuances of the market.
and finding those companies that are really well positioned to thrive.
Exactly. It's not just about picking winners, it's also about managing risk.
Oh, right. We haven't really talked about that. How do they manage risk?
Well, one of the key ways is through diversification.
Okay, so not putting all their eggs in one basket.
Exactly. They invest in a range of companies across different sectors.
So even if one sector underperforms,
Right.
the rest of the portfolio can kind of balance it out.
Exactly. It helps to mitigate that risk.
And they're focused on those companies with strong fundamentals.
Yes,
Good corporate governance, that also helps, right?
absolutely. It reduces the likelihood of those nasty surprises.
Okay, so it sounds like they're taking a very thoughtful, balanced approach,
They are. They're really trying to do their homework.
which is good news for potential investors.
It is.
But as we kind of wrap up this part of the discussion, I want to bring it back to the listener.
Okay.
Because, we've been talking a lot about the ins and outs of this fund.
We have.
But how does all of this translate into actionable insights for someone who's actually considering investing?
That's a great question. I think the key takeaway here is that Vedartha is not just passively riding the wave of India's growth. They're actively navigating it.
Okay.
They're identifying those specific areas that offer the most compelling opportunities. And then they're applying this very rigorous process to select the companies that have the best chance of success.
So it's a very targeted approach,
It is, and it requires that deep understanding of the Indian market.
which is something that, most individual investors probably don't have.
Right. That's why it's important to do your research.
Hmm.
And if needed, consult with a financial advisor.
Yeah, because ultimately it's about deciding whether this fund aligns with your individual goals and risk tolerance.
Exactly.
And speaking of risk, I know the document does acknowledge that investing in India comes with its own set of challenges.
That's
They talk about things like, regulatory hurdles, political uncertainty,
right. Those are real risks.
and that's something that potential investors need to be aware of.
Absolutely. Emerging markets tend to be more volatile.
Yeah, but of course, with that volatility comes the potential for higher returns.
That's the trade-off.
Right, you got to weigh the risks and the rewards.
Exactly. And that's why it's so important to understand your own risk tolerance.
Your own investment goal.
Yeah. What are you comfortable with? What are you trying to achieve?
Right, someone who's looking for those steady, predictable returns, they might not be comfortable with an emerging market fund.
Probably not.
But someone who's got a longer time horizon,
Right.
a higher risk tolerance, they might see this as a great opportunity.
Absolutely. It's all about finding the right fit.
So, lots to consider.
There is.
But I think we've given our listeners a lot to think about
I hope so.
in terms of, the potential of India, the approach that Vedartha is taking.
And the importance of, really doing your own due diligence.
Exactly. And in the final part of our deep dive, we'll talk more about the potential risks and rewards of investing in India.
Sounds good.
So we've spent a good chunk of time now really dissecting this Vedartha Equity Opportunities Fund.
Yeah, we've gone pretty deep.
We've talked about their strategy, these high-growth sectors they're targeting, their, that rigorous selection process.
Quite a process.
But I think now it's time to kind of zoom out a little bit. Think about the bigger picture.
Yeah, how does a fund like this actually fit into like a well-rounded investment portfolio?
Right, because it's easy to get caught up in the excitement of India's growth story.
It is. It's a compelling story.
But diversification is key, right?
Absolutely. Even
And-
the most promising investment should only be one piece of the puzzle.
And this is probably where, working with a financial advisor can be really valuable.
Oh, for sure.
Someone who can help you assess your risk tolerance, understand your long-term goals, and really create that balanced portfolio.
Right, because it's like building a house.
Okay, I like where you're going with this.
You wouldn't just focus on one room or one architectural style.
Right, you need a solid foundation.
You need a good structure, a variety of spaces to meet your needs.
Yeah, it's got to be functional, it's got to be beautiful, it's got to be, able to withstand the elements.
Exactly. And a well-diversified portfolio, it's kind of the same thing.
Right, it can weather those different market conditions.
Whether it's a storm or a sunny day, you're prepared.
So spreading your investments across different asset classes, geographies, sectors.
Yeah, it's about not putting all your eggs in one basket.
Right. And for some investors, exposure to a high growth market like India, that could be a really valuable addition to their portfolio.
It could be.
But it's important to go in with open eyes, right?
Absolutely.
Understanding the potential risks as well as the rewards.
Because there are risks. The document acknowledges that.
Yeah, they talk about things like regulatory hurdles, political uncertainty.
Right. And those are things that, especially with emerging markets, you have to be prepared for.
Because they tend to be more volatile.
They do. There's more potential for ups and downs.
But then, of course, there's also the potential for those outsized returns.
Right. It's the trade-off.
India's projected growth rate is significantly higher than, a lot of developed economies.
It is. It's an exciting market.
So higher risk, higher potential reward.
Exactly. And it really comes down to the individual investor's risk appetite.
Their goals, their time horizon.
What are they comfortable with? What are they hoping to achieve?
Right, because if you're someone who's really looking for those steady, predictable returns,
Yeah.
an emerging market fund might not be the best fit.
Probably not.
But if you've got a longer time horizon, you're comfortable with a little bit more volatility
All right. Then it might be a great opportunity.
to really capitalize on India's growth.
Exactly.
So it's all about finding that right balance, right?
It is.
Not just within your portfolio, but also within yourself.
Within your own comfort level.
Yeah, because investing shouldn't be a source of stress, right?
No, it should be a way to achieve your financial goals.
And to participate in these, exciting opportunities around the world.
Absolutely.
So I think we've given our listeners a lot to chew on today.
Yeah, we've covered a lot of ground.
The intricacies of this Vedartha Equity Opportunities Fund, all the details about India's growth story, the risks, the rewards.
A lot to digest.
But hopefully, our listeners now feel equipped to really decide for themselves
To make an informed decision.
whether this fund aligns with their own goals and risk tolerance.
That's the goal.
So if you're interested in learning more,
Yeah, definitely encourage you to.
we encourage you to check out the full document.
It's got a lot of great information in there.
It's got all the data, all the details, all the insights.
All the nitty-gritty.
And thanks for joining us on this deep dive.
It's been a pleasure.
We always appreciate you taking the time to share your expertise with us.
Happy to do it.
And to our listeners, until next time,
Keep learning.
keep exploring and happy investing.